Do you think stock price is the most important number when evaluating a company? Think again. While it might grab your attention, it's not the whole picture. While the stock price is what you see flashing on the ticker tape, it only tells part of the story. It's just a snapshot, a momentary reflection of market sentiment. To truly understand a company's worth, you need to delve deeper into the realm of market capitalization. This involves looking at the bigger picture, beyond just the stock price. Imagine two companies, one selling premium cars and the other selling bicycles. At first glance, the car company might seem more valuable due to its high-priced products. The car company's stock price might be higher than the bicycle company's. But this doesn't necessarily mean it's the larger or more valuable company. However, if the bicycle company sells millions of bikes and the car company sells only a few thousand cars, which company is actually bigger? The volume of sales can significantly impact the overall value. This is where market capitalization comes in. It provides a more comprehensive view of a company's value by considering both stock price and the number of shares outstanding. Understanding market capitalization is crucial for every investor, big or small. It helps you see beyond the surface and make more informed decisions. It gives you a more accurate picture of a company's size and position in the market. This can be especially important when comparing companies in different industries. It's like looking beyond the price tag to understand the true value of a product. The price tag might tell you the cost, but not the quality or worth. So let's embark on this journey to understand market capitalization and how it can empower you to make informed investment decisions. It's a key tool in your investment toolkit. Let's unlock the secrets beyond the stock price and discover the true worth of a company. By understanding market capitalization, you'll gain deeper insights and make smarter investment choices. Market capitalization, often shortened to market cap, is simply the total value of a company's outstanding shares. It's calculated by multiplying the company's current share price by the total number of outstanding shares. Think of it as a measure of the company's worth in the eyes of the stock market. For instance, if a company has 100 million outstanding shares and its current share price is 50 rupees, its market cap would be 5,000 crores, 100 million times 50. This figure represents the total market value of the company. Market capitalization provides a more holistic view of a company's size than just looking at its stock price. It helps you compare companies within the same industry or across different sectors, regardless of their individual share prices. Understanding market cap is fundamental to making sense of the stock market. It's the first step towards assessing a company's financial health and its position within the broader market landscape. Companies are often categorized based on their market capitalization into three main groups: small cap, mid cap, and large cap. These categories help investors understand the size, risk, and growth potential of different companies. Each category represents a different level of risk and growth potential. Understanding these distinctions is crucial for making informed investment decisions. Large cap companies. These are the behemoths of the market, with market caps typically exceeding 10,000 crores. They are often multinational corporations with a significant global presence. They are well established, often leaders in their industries, and generally considered less volatile. Their stability makes them a safer investment, especially during economic downturns. Examples include Reliance Industries, HDFC Bank, and TCS. These companies have a proven track record of performance and reliability. Mid-cap companies. These companies fall between small cap and large cap, typically with market caps ranging from 500 crores to 10,000 crores. They are often in a growth phase, expanding their market reach and operations. They offer a balance of growth potential and stability. Investors often look to mid-cap companies for a mix of moderate risk and reward. Small cap companies. These are the new kids on the block, with market caps usually below 500 crores. They are often startups or companies in the early stages of development. They are often characterized by high growth potential but also come with higher risk. Investing in small cap companies can be rewarding but requires careful research and risk management. Market capitalization plays a vital role in index construction. Indices are used to track the performance of a group of stocks and provide a benchmark for investors. The Nifty 50, for example, comprises the top 50 large-cap companies listed on the National Stock Exchange of India. This index is a key indicator of the market's overall health. These companies are selected based on factors like market cap, liquidity, and industry representation. This ensures that the index accurately reflects the market's leading sectors. Understanding these categories helps investors diversify their portfolios and manage risk. Diversification is a strategy that involves spreading investments across various assets to reduce exposure to any single asset or risk. By strategically allocating funds across different market cap segments, investors can aim for a balanced and potentially rewarding investment strategy. This approach can help in achieving long-term financial goals while mitigating risks. Section 4. Titans of the Nifty 50, Reliance Industries versus HDFC Bank. Let's take a look at two giants of the Indian stock market, Reliance Industries and HDFC Bank, to illustrate the importance of market capitalization. Reliance Industries, a conglomerate with interests in petrochemicals, refining, telecom, and retail, boasts a massive market cap, making it one of the largest companies in India. Its vast scale and diversified businesses contribute to its significant market value. HDFC Bank, a leading private sector bank, also commands a substantial market cap, reflecting its strong financial performance, extensive customer base, and dominant position in the banking sector. While both companies have different business models and stock prices, their market caps highlight their immense size and influence within the Indian economy and the stock market. This comparison underscores how market cap provides a more comprehensive understanding of a company's stature beyond just the stock price. Section 5. Debunking the myths. Market cap versus stock price. Many new investors fall into the trap of equating a high stock price with a company's size or success. They often assume that a higher stock price means the company is more valuable or performing better in the market. However, this can be misleading. Stock price alone does not provide a complete picture of a company's value. A company with a high stock price might have a relatively small number of outstanding shares, resulting in a lower market cap than a company with a lower stock price, but a significantly larger number of outstanding shares. This is a crucial distinction that many overlook. For instance, a company with a stock price of 1,000 rupees but only 1 million outstanding shares would have a market cap of 100 crores. This means the total value of all its shares is 100 crores. In contrast, a company with a stock price of 500 rupees but 50 million outstanding shares would have a market cap of 2,500 crores, making it significantly larger despite the lower stock price. The sheer number of shares can greatly influence the market cap. Therefore, relying solely on stock price to gauge a company's size can be deceptive. It's important to consider the number of outstanding shares as well. Market capitalization provides a more accurate and reliable measure of a company's true worth and standing in the market. It takes into account both the stock price and the number of shares, offering a comprehensive view of the company's value. Section 6. Strategic investing, harnessing the power of market cap. Market capitalization is not just a number. It's a powerful tool that can guide your investment decisions. Here are some practical tips for using market cap strategically. Diversification. Allocate your investments across different market cap segments to manage risk and potentially enhance returns. Growth versus stability. Consider your risk tolerance. Large cap companies offer stability, while small cap companies present higher growth potential but also higher risk. Index investing. Invest in index funds that track specific market cap segments, such as the Nifty 50 for large cap exposure. Research and analysis. Always conduct thorough research on companies, considering factors beyond market cap, such as financial performance, management quality, and industry outlook. By understanding and incorporating market capitalization into your investment strategy, you can make more informed decisions, align your portfolio with your financial goals, and navigate the complexities of the stock market with greater confidence. Section 7. The final word, market cap, your guiding star to smart investing. In the ever-evolving world of stock markets, market capitalization emerges as a beacon of clarity, guiding investors towards informed decisions. It goes beyond the superficial allure of stock prices, revealing the true size and potential of companies. Remember, investing is not a gamble, it's a calculated endeavor. By understanding market capitalization, you equip yourself with a powerful tool to evaluate companies, manage risk, and make strategic investment choices aligned with your financial aspirations. As a special surprise for my avid readers, I'm offering a free ebook on decoding market capitalization, a beginner's guide to smart investing. Simply visit my website and download your copy today. Let's embark on this journey of financial empowerment together.